Imagine this. In just the past year, trillions of dollars from Wall Street giants have flooded into crypto, turning what was once a niche playground into the backbone of global finance. And 2026 could make it explode even further. Welcome to Generational Wealth, your pathway from knowledge to legacy. Today we're diving into institutional adoption, the dawn of crypto's mainstream era. If you've been tracking the market, you know 2025 was transformative. With spot exchange-traded funds surging and powerhouses like BlackRock and MicroStrategy at the forefront. As we step into 2026, expect even greater momentum with unprecedented fund inflows. Tokenized assets reshaping finance, seamless vertical integration across sectors, and projections for groundbreaking mergers and acquisitions that could redefine the entire crypto ecosystem. In this episode, I'll unpack why institutions are committing so deeply, the pivotal forces like evolving regulations and asset tokenization, and what leading analysts foresee for the year ahead. Whether you're building your portfolio, trading actively, or simply exploring crypto's potential, this insight could guide you through the upcoming surge. Let's explore it step by step. To begin, crypto has evolved far beyond individual investors. Major players such as hedge funds, pension schemes, banks, and sovereign wealth funds now view digital assets as essential portfolio components. Grayscale research indicates that less than 0.5% of advised wealth in the United States is currently in crypto. Yet this allocation is poised for substantial expansion as more entities refine their strategies and conduct thorough evaluations worldwide. Crypto exchange-traded products have attracted $87 billion in net inflows since Bitcoin funds debuted in 2024. With pioneers like Harvard Management Company and Abu Dhabi's BUIDL setting the stage for broader participation. At the helm is BlackRock, whose iShares Bitcoin trust has dominated, drawing hundreds of millions in a single day during the previous year. Recently, it pulled in $287 million in one session, underscoring Wall Street's shift from doubt to enthusiastic integration. Recall when J.P. Morgan's Jamie Dimon dismissed Bitcoin as a mere novelty? He's since adjusted his stance, recognizing its promise amid this institutional wave. BlackRock extends beyond Bitcoin, advancing tokenized treasuries via initiatives like BUIDL, which has disbursed over $100 million in dividends. This exemplifies tokenization, converting tangible assets like bonds and stocks into blockchain tokens for efficient, cost-effective trading around the clock. MicroStrategy stands out as the corporate innovator in this space. Under Michael Saylor's guidance, they've accumulated more than 252,000 bitcoins, positioning them as a top corporate holder. Their approach treats Bitcoin as a reserve asset to counter inflation and currency weakening. This strategy yielded impressive results in 2025, as Bitcoin reached peaks around $126,000. Beyond accumulation, MicroStrategy is pursuing vertical integration through Bitcoin analytics software and innovative financing models. This digital asset treasury concept is advancing, with Coinbase anticipating a second iteration in 2026, where firms progress to sophisticated trading, secure custody, and acquiring dedicated blockchain capacity as a strategic resource. Exchange-traded fund inflows are the catalyst accelerating this trend. In 2025, United States Bitcoin and Ether spot funds drew in billions, expanding the investor pool well beyond everyday traders. Bitwise Investments projects that in 2026, these funds will acquire over 100% of new supply for Bitcoin, Ethereum, and Solana, fueled by escalating institutional interest. This absorption of all freshly minted coins and more could exert significant upward pressure on values. Silicon Valley Bank aligns with this view, expecting hastened institutional embrace through larger venture investments, hybrid products merging traditional and crypto finance, and banks spearheading custody, lending, and settlement services. Tokenized assets, or real-world assets on blockchain, represent the direct convergence of crypto and conventional finance. This enables shared ownership of items like property, artwork, or government securities, facilitating continuous trading with reduced costs. BlackRock's BUIDL exemplifies this, tokenizing United States treasuries and achieving notable dividend benchmarks. B2 Broker highlights that 2026's momentum stems from regulatory advancements and yield-focused compliant tools. With 76% of global investors intending to increase digital asset holdings, Circle's leadership envisions the regulated United States dollar stablecoin sector reaching $1 trillion by year's end, expanding into areas like international transfers and supply chain operations. Vertical integration deepens this transformation as organizations construct comprehensive ecosystems around crypto. Goldman Sachs anticipates that enhanced regulations, such as the United States market structure legislation enacting in the first half of 2026, will propel further adoption among investment firms. This may enable novel applications beyond trading, including blockchain-based issuances for emerging and established companies. MicroStrategy exemplifies this with its Bitcoin holdings. While institutions like State Street report that 59% plan to dedicate over 5% of assets under management to crypto, potentially doubling exposure within 3 years. Even university endowments are engaging, with Bitwise forecasting that half of Ivy League funds will allocate to crypto this year. For 2026 outlooks, analysts are optimistic about unprecedented mergers and acquisitions amid clearer international guidelines. Coinbase envisions profound expansion as institutions refine their engagements. Grayscale expects cross-party crypto laws to materialize, supporting regulated exchanges and linking blockchains to traditional systems. Silicon Valley Bank points to upward capital trends, with venture funding for United States crypto entities rising 44% to $7.9 billion in 2025. On valuations connected to this influx, Citi's optimistic scenario places Bitcoin at $189,000, while Tomley targets $250,000, propelled by institutional flows and monetary easing. Goldman cautions that timely legislation passage before elections is crucial to prevent setbacks. But the prevailing sentiment favors consistent progress as institutional liquidity supplants retail-driven fluctuations. Forbes captures the essence. Institutional involvement will persist despite market swings, broadening blockchain access for all. And across platforms like X, voices such as Young Hoon Kim see Bitcoin reaching $276,000 by February, attributing it to these same catalysts. In summary, 2026 positions crypto for genuine mainstream integration, courtesy of these institutional leaders. From billions in fund inflows to trillions in tokenized value and record-setting deals, this new chapter offers vast potential, yet always approach with diligence. If this analysis resonated, give it a thumbs up, subscribe for ongoing insights, and share your thoughts below. What's your Bitcoin forecast for 2026? We do a crypto news video every morning and a deep dive every afternoon. Let us know in the comments any subjects you'd like us to cover. Quick disclaimer: I'm not a licensed financial advisor. This is for educational purposes only and not financial or investment advice. Crypto is volatile. Never invest more than you can afford to lose. Do your own research.